So we're moving over to Forex pairs, currently having a look at the weekly time frame for GBPUSD. Prior week, bullish engulfing, taking out previous buy stops. We never got to meet, but we did meet the consequent encroachment of this down close candle. Sorry, this up close candle, which is the order block. This is the beginning of the order block. This is the high of the order block. This is the medium point of the order block, which we met to the absolute T. Whoa. Calm your horses. Okay, fair enough. Alright, so having a look at this on a weekly standpoint, this week we've ran on buy stops and we've closed, I'd say, 45% inside of this candle. We've got 1, 2, 3 down close candles before we see a gap open lower, a closure inside of this candle here, and obviously we get a break. I'm looking more at the bodies of these candles than anything else. We also have a buy-side imbalance, also an inefficiency. But when it comes down to GBPUSD, aiming for low-hanging fruits in this scenario would be the wisest of cases, because if you got the opening gap located from 127.025 to 127.776, I'd personally want to target this area here, as this is a new week opening gap from the week's close to the new week's open. This is what I want to target. So because buy stops has already been taken, doesn't necessarily mean sell stops is next. I mean, it's possible. I'm not saying it's not possible, but as a scalper, I'm aiming for higher probability setups and scenarios that are most likely to pan out for that week. If I use the Fibonacci to map out where equilibrium would be located, which would be discount premium 128.275, and yes, this is me eyeballing it, so this might not be accurate on your charts, but 128.275, anything below that would be regarded as a discount price point, and it just so happens that the gap forms in a discount from the immediate lows to the highs on a weekly time frame. I'm going to delete this just to make sure that the charts stay clear. I'm going to have a look at it from a weekly standpoint. Weekly buy-side liquidity has been taken. Have a look at it from a daily standpoint. Let's have a look at this run up. Obviously, we started trading here. We sold off. We created the highs, buy stops, poached, sold off. We have this order block right here, which I've mapped out on the daily time frame. This open to that gap, that there is an important price point, something to keep an eye out for. I will be stretching these out, and you know, nice, that's perfect. So I'm looking at further discount prices into 128 for the week, but then at the same time we could get some rejection from the 128.604 region. Ideally, what I'd like to see is something like this in order to get into the trade. This is the manipulation in order to get into the trade. This is the reason why I like to see things like this happen. I like to see buy stops. So this is against my bias, but this is the narrative of how the trade is going to pan out, how I'd like the trade to pan out, or how I'd like the bias to pan out. The bias might be short, but the narrative could be long. So in this instance, I would want to see something along the lines of the last up close candle before the shift in market structure occurs, we see a rally up into that region before we see sell off into a discount price point for the week. Not for the next 2 or 3 weeks or for the next month. This is for the next week because we'll have a look at it from a daily time standpoint. Thursday and Friday. Thursday we took the lows of Wednesday out. Friday we continued to the downside and we traded into equilibrium. If I mapped out my fib from the lows to the highs, immediate dealing range low to highs, then the 129116 area would be something that I would mention in my minds. But as GBPUSD and Euro are not part of my, put it this way, I don't trade forex pairs either. I also use those as barometers as to what everything else is most likely to do also, right? I analyze all of the markets in the same way in order for me to get a better understanding for how ES is going to book. It doesn't make sense, guys, but it makes sense to me. All right. I try to keep up with everything in order to have a good understanding of the differences in correlation and like remember over time doing it wait one sec. Yeah, doing it one sec. Yeah, doing it once wouldn't pay dividends, but if you're doing it over and over again for weeks on end, for months on end, you gain a lot of data that a lot of people who are just looking at one chart, whether that's GDP, USD, Euro, or gold, or Bitcoin, I'm looking at everything every single day. And yes, it might be long, but I'm gaining insight as to the correlations and the differences between all different market classes, not even pairs, the classes, you know? If I'm journaling that and keeping up to date with when I get it wrong, when I get it right, what I could do better, I mean, it can only go up, right? That's what I try and aim for, guys. So yeah, with that being said, I'm going to quickly have a look at the hourly time frame. This is what has happened. Weekly lows has been taken on Thursday. So what you could see is maybe a rally up to 129,600, 129,700, and a continued sell-off. So up there. There's not really any imbalances, but we do have stops that could potentially get triggered. So this is what has happened for the hour, and yeah, I'm gonna wrap it up, guys.